podcast where truth moves faster than a Holstein calf. No waiting on some pretty page. We're charting your ground in the digital age. From genomic codes to roll-out facts, we cut through the noise, no holding back. Not your daddy's dairy news tonight. We're sparking debates with every insight. The ring's not where the real fight's at. It's in the data, in the channel chat. From pasture to processor to your morning cup, we're raising the stakes. Try and get ahead of herd. Yeah! Where the future's more than just a word. Ahead of herd. Come on! The bullvine's calling, let your voice be heard.
Welcome to the Bullvine Podcast, where we challenge the sacred cows of the dairy industry with fearless analysis and evidence-based insights. I'm your host, and today we're diving into one of the most controversial topics in global dairy policy, a topic that will make free market economists squirm and force every dairy farmer to question everything they've been told about competitive markets. What if I told you that everything the dairy industry believes about free markets is actually subsidized fiction? What if the system we've been told represents the gold standard of efficiency actually requires $33 billion in annual taxpayer bailouts just to keep farmers from going bankrupt? Today we're examining the $50 billion truth, a comprehensive analysis that exposes how Canada's supposedly outdated supply management system is quietly outperforming every single free market dairy system on the planet. While American dairy farmers face a 55% surge in bankruptcies, and Australian producers report that 55% are considering leaving the industry altogether, Canadian dairy farmers are achieving world-class milk yields of 10,400 kilograms per cow, with debt-to-equity ratios that would make any financial advisor smile. This isn't about nationalism or protectionism. This is about hard data, measurable outcomes, and the uncomfortable truth that stability isn't the enemy of efficiency. It's efficiency's most critical component. So buckle up, because we're about to challenge some fundamental assumptions about dairy policy, market economics, and what it really means to have a free market. This is the Bullvine Podcast, and we never shy away from the controversies that matter most to your operation's future.
Welcome to the Deep Dive. Today we're tearing into something that might seem a bit counterintuitive, really. It's from a recent Bullvine article, the claim that Canada's dairy supply management system, the one that gets criticized quite a bit, well, it might actually be outperforming every single so-called free market system out there globally. So our mission today is to really unpack that, to uncover the hidden truths behind this really bold assertion and figure out what it means for your operation.
Yeah, it's fascinating, isn't it? Because the Bullvine article, it really challenges the very foundation of that free market ideology when it comes to dairy. It suggests that what a lot of economists preach might just be, and this is a quote from the article, subsidized fiction.
Subsidized fiction, wow.
Exactly. And we're not just talking theories today. We're going to be looking at, cold, hard data, measurable outcomes, things that suggest Canada's system, the one often called outdated, is actually delivering everything, deregulation promises, but maybe even doing it better than these systems they tout as free. It's definitely an uncomfortable truth for a lot of people to confront.
Okay, so let's start peeling back those layers. The Bullvine article, right from the get-go, it hits us with some pretty compelling data points, numbers that really challenge conventional thinking. Canadian dairy farmers, it says, are achieving, get this, 10,400 kilogram milk yields per cow, which, for context, that's absolutely world-class productivity.
Really with the best.
But here's what's maybe even more striking. They boast incredibly low 0.191 debt ratios. Now, if you're running a dairy farm, managing debt is, it's everything for long-term survival. And that figure, 0.191, it's truly remarkable. I mean, basically, for every dollar of assets a Canadian farm owns, they owe about 19 cents.
That's a strong position.
A very strong financial position. It gives them this huge buffer against, unexpected challenges. A level of financial freedom that, frankly, many dairy producers elsewhere can only dream of.
Yeah, absolutely.
Now, contrast that stability with what the Bullvine article calls these free market systems. And the irony here is thick, right? Because the article claims these systems require massive government support, markets that are supposed to be self-sufficient, standing on their own 2 feet.
But they're not.
No, they're propped up by billions in taxpayer dollars. And the article highlights a really devastating statistic. Chapter 12, family farm bankruptcies, that's the specific type for family farmers, signaling severe distress, often the loss of a multi-generational legacy. Well, they're up an astonishing 55% in 2024 in these so-called free markets.
55%, that's huge.
It's staggering. Meanwhile, Canada, with its supply management system, it hasn't needed a single bailout dollar from the government to keep its dairy sector afloat. Not one. The Bullvine article, it frames this perfectly as an uncomfortable truth that free market advocates desperately want buried. And when you see those numbers side by side, well, it really puts that subsidized fiction claim into perspective, doesn't it?
It certainly does. And if we connect this to the bigger picture, it raises a really important question. If the conventional wisdom, the thing we always hear, is that deregulation automatically leads to efficiency and prosperity, well, why are we seeing such a dramatic, stark difference in financial health?
Right. The results don't match the promise.
Exactly. The article uses this vivid analogy, one that I think any dairy farmer will instantly get. It says, if your nutritionist promised a balanced ration but delivered 40% spoiled feed instead, you'd fire them immediately.
Instantly, no question.
Yet we continue to trust, or at least accept, dairy policies that consistently lead to these devastating outcomes. Year after year, we seem to accept widespread financial instability, farm failures, as just a natural part of the business. It really forces you to ask if we're being fed a spoiled ration, metaphorically speaking, when it comes to this economic policy advice.
That's a powerful way to put it.
And the measurable outcomes the Bullvine article highlights are just critical. It goes beyond those impressive milk yields. We're talking debt-to-equity ratios of 0.191 for Canada, like you said. Now, let's put that into perspective. Compared to New Zealand, New Zealand's often held up as a shining example, right? Export-focused dairy. Well, they operate with a staggering 47.4% debt-to-asset ratio.
Wow. Nearly half their assets financed by debt.
Yeah.
Exactly. It's a massive difference in financial leverage, in vulnerability. While Canadian farms have this strong equity cushion, the average New Zealand farm, well, it's like operating your business on a tightrope versus a wide, stable bridge. One small gust of wind, a market fluctuation, and a highly leveraged farm can just spiral. The Canadian farm, it's built to weather storms with significant financial resilience.
The bankruptcies.
In Canada. So negligible, they aren't even tracked as significant economic indicators. It's just not a widespread issue. Contrast that with other systems seeing the surge in farm failures, thousands of families losing their livelihoods. And those milk yields, projected at 10,400 kilograms per cow, they show stability doesn't stifle productivity. It enabled it. It lets farmers invest in genetics, nutrition management, maintaining that high output year after year, but with a level of financial security that makes the volatility elsewhere look like you're, literally feeding your cows a different unpredictable ration every single day. So, okay, let's bring this down to the farm level. What does this all mean for your operation? Specifically for your long-term planning, your peace of mind. The Bullvine article poses 4 direct questions that really cut to the chase on sustainability. They're incredibly insightful. First, it asks, can you plan facility upgrades, say 5 to 7 years in advance, with real confidence?
That's a big ask in most systems.
It's huge. Think about that capital investment. Hundreds of thousands, maybe millions for new parlors, robots, bigger barns. Being able to confidently plan those upgrades, knowing your future income streams are reasonably secure. That speaks volumes about foresight. It cuts down an enormous amount of stress. It's the difference between reactive emergency spending and, strategic proactive investment.
Absolutely.
Second question, do you know your milk price within, say, 2%, 12 months ahead? Imagine the power of that certainty. Budgeting for feed, labor, repairs, making purchasing decisions for machinery or breeding programs with that kind of clarity, it transforms planning from guesswork into, almost a science.
It changes the game completely.
Third, can you make genetic decisions based on 10-year projections? We know genetics is a long game, right? The sires you choose today, the dam lines, they impact your herd for years, decades even. Planning that far out, knowing the market will likely support those long-term investments. That implies a stability that allows for true generational herd improvement, focusing on balanced breeding goals, not just chasing short-term output.
A much more sustainable approach.
And finally, the fourth question. Are your neighbors competitors or are they collaborators in market stability? This really touches the fabric of rural communities. In a volatile, deregulated market, your neighbors can feel like rivals, right? Undercutting prices, expanding to grab a shrinking pie. It can lead to animosity, isolation. Whereas in a stable system like Canada's, with managed production, there's more room for collaboration, sharing knowledge, mutual support. It fosters healthier, more resilient rural communities.
That social aspect is often overlooked.
Totally. And for Canadian farmers, the Bullvine article states the answer to all 4 of these questions is a resounding yes. Every single one. They plan with confidence, know their prices, make long-term genetic decisions, and often see neighbors as collaborators. Now, the real test the article puts before us, before you listening, is this. How many of those questions can you answer affirmatively in your current system? That stark comparison, it really underscores the difference in operational reality, doesn't it?
It really does. It's a powerful self-assessment.
Okay, let's continue this deep dive. The Bullvine article uses another great analogy here. It calls this next part a feed analysis that'll make free market purists as uncomfortable as a Holstein in 100 degrees of fire weather.
Chuckles. Yeah, that paints a picture. A cow is struggling, totally out of its element. It captures how uncomfortable these truths are for that conventional thinking.
And the core assertion here is stark. It's absolute. There are no free dairy markets anywhere.
Boom. Right there.
It's a huge claim, basically arguing that the whole concept of a truly unregulated, self-correcting dairy market is, well, it's a fantasy, a convenient story that just doesn't hold up when you look at the real world.
So that raises the obvious question, right? If genuinely free dairy markets don't actually exist, then what are these systems doing?
Yeah.
And what are their true costs? The article then unpacks what it calls the multi-billion-dollar subsidy reality check and the picture it paints across different nations. It's quite revealing. It exposes these huge hidden costs borne by taxpayers and farmers.
Okay, where do we start? The U.S.?
Let's start with the United States, often hailed, as the article says, as the poster child for dairy deregulation. But it actually operates through massive, ongoing government intervention. It highlights the Dairy Margin Coverage Program, the DMC. That's a crucial, permanent safety net for producers.
Right, it protects against that margin squeeze between milk price and feed cost.
Exactly. It indemnifies farmers against those volatile differences. It prevents widespread collapse during downturns. But it's not a temporary fix. It's an embedded feature. And then you look at the USDA's 2025 farm sector income forecast. Cash receipts from milk sales projected at a huge $52.1 billion, up $1.4 billion from 2024.
Sounds good on the surface.
It does. Higher prices, more quantity sold. The USDA raised the 2025 milk production forecast to 227.3 billion pounds. Average all milk price expected around $21.60 per hundredweight. But here's the key point the Bullvine article makes. This apparent stability in the U.S., it comes through constant government intervention, not through inherent market mechanisms working themselves out.
So it's managed stability, just managed differently and maybe less transparently.
You could argue that, compared to Canada, where farmers under supply management experience minimal price volatility. Their adjustments are predictable, almost like noise. It lets them plan breeding facilities years ahead, like having a feed contract locked in at harvest. It's a stark contrast. One system relies on continuous government support for a semblance of stability,
while the other builds stability into its structure.
Precisely.
Okay, what about Australia? The article calls it a catastrophe.
Yeah, the Australian catastrophe. It's a truly stark picture of what happens when that free market ideology meets reality in a deregulated environment.
Mm-hmm.
Get this, 55% of Australian dairy producers are considering exiting the industry completely.
Wow, over half.
It's not just financial hardship, it's a total loss of faith, no viable future seen in the system. Farmers reporting earnings as low as $2.46 an hour.
$2.46 an hour.
Barely minimum wage some places, not enough to sustain a farm. And this follows brutal 10-15% farm gate price cuts, often imposed by powerful processors. Since 1980, Australia has lost an incredible 80% of its dairy farms,
80%.
creating what researchers now call dairy deserts. Entire rural communities collapsing as the economic base just evaporates. The article calls it legalized destruction. Not market efficiency, but exploitation driven by extreme market power imbalances. Imagine, as the article puts it, if your feed supplier had monopoly power and suddenly cut your milk payment by 15% while your feed costs jumped 40%. That's the reality Australian farmers face.
No negotiating power at all.
None. Power concentrated with a few processors, individual farmers left adrift, often forced out.
Okay, and Europe. The subsidy shell game.
Right, the European subsidy shell game. The EU's Common Agricultural Policy, the CAP, one of the world's biggest subsidy programs. It's not small change, 31% of the total EU budget. A massive $387 billion allocated just for 2021-2027. Huge sums of taxpayer money flowing constantly into agriculture.
And it's working.
Well, the article notes that recent EU reports themselves are calling for a major overhaul, admitting business as usual is not an option. Why? Because of multiple crises hitting farmers, climate change, geopolitics, soaring input costs. This isn't outside criticism. It's the EU itself saying their heavily subsidized system is under severe stress, failing to deliver the promised stability or prosperity.
So across the board, US, Australia, EU, these supposedly free or efficient systems seem to need constant, massive support just to keep going.
That's the core argument from the Bullvine article. It leads right back to that critical question. If these systems are so efficient, why the constant multi-billion-dollar taxpayer bailouts to prevent total collapse? The article's conclusion is clear. These aren't truly free markets. They're heavily subsidized markets. The true costs are hidden from consumers, offloaded onto taxpayers, while farmers still suffer from volatility and power imbalances. It's like an economic illusion, you know. The invisible hand is actually propped up by the very visible hand of government checks.
A powerful indictment indeed. Okay, let's really dig into the hard numbers now. The head-to-head comparisons from the Bullvine article. This is where the data really tells the story, isn't it? Like looking at the diagnostic reports on 4 different combines, seeing which one's performing, which one's costing you a fortune in hidden repairs.
Exactly. And what's fascinating is how systematically the data contrasts Canada, supply management, against the USA, free market, Australia, deregulated, and New Zealand, export-focused, across these key metrics. This direct comparison is where that uncomfortable truth really comes into focus, challenging a lot of deeply held economic beliefs.
Where should we start? Bankruptcies.
Let's start with farm bankruptcy trends. In Canada, under supply management, negligible. So insignificant, and it's not tracked as a major economic indicator. Think about that, a system where farm failure isn't a chronic, systemic issue.
Almost unheard of compared to elsewhere.
Right? Compare that to the U.S. Chapter 12 family farm bankruptcies up a staggering 55% in 2024. That's up thousands of families losing livelihoods, homes, legacies due to the intense financial pressure of a volatile market. Australia, equally dire. 55% of producers actively considering leaving the industry, a clear system in crisis. And New Zealand, despite its export success, consistently shows persistent high debt stress among its dairy farmers, highlighting the fragility that comes with that extreme market exposure. For a farmer, this isn't just data. It's the difference between stability and life-altering uncertainty.
Okay, what about price swings, price volatility?
Crucial for planning, right? Price volatility. Canada sees minimal adjustments, less than 1% annually, typically. Predictable, minor shifts you can plan around, like a minor feed quality fluctuation you adapt to easily. Contrast that. U.S. sees constant forecast revisions. The all-milk price swing wildly $21.10 to $23.05 per hundredweight in recent forecasts. That's a huge range. Australia, even more brutal. 10-15% price cuts in a single season. That can completely wreck a farm budget overnight, turn profit into loss. New Zealand, wide forecast ranges $8 to $11 per kgms kilograms of milk solids, reflecting their extreme dependence on unpredictable global markets. For a farmer trying to plan feed buys, equipment investments, hiring, this kind of volatility is paralyzing. Long-term strategy becomes nearly impossible. And the debt levels we touched on earlier. Yeah, average debt to asset ratio. Key health indicator. Canada maintains around 16%. The Bullvine article calls this sustainable. Healthy balance sheets, strong footing, starkly different from rising stress in the U.S. and New Zealand's high leverage at 47.4%. High debt means less equity, more risk, less flexibility when markets turn sour. A small downturn can trigger catastrophe for highly leveraged farms.
And the government support needed.
Government support required. The differences here are stark. Canada's system. Transparent, finite compensation, mainly via tariffs and border controls, regulating imports, prioritizing domestic supply. Keywords: transparent and finite. Costs known and controlled. U.S. and EU. Massive ongoing bailouts. U.S. DMC program, continuously funded. A permanent multi-billion-dollar taxpayer safety net. EU CAP, hundreds of billions of euros, often just to keep the system from collapsing. These aren't one-offs, they're continuous infusions. Australia and New Zealand. Minimal, often ineffective direct support noted, showing deregulation doesn't guarantee self-sufficiency, often leads to farm abandonment, regional collapse.
How about production stability, keeping supply steady?
Production stability. Canada projects steady 3% growth, managed, sustainable expansion aligned with domestic demand, stability, planned investment. The U.S., volatile boom-bust cycles, overproduction, then sharp contractions, and tragically, milk dumping during crises because the market can't absorb the excess. Australia, a 30-year production low, direct result of farmers leaving en masse due to hardship. New Zealand, export-dependent volatility, production dictated by unpredictable global whims, not domestic planning, highly vulnerable to trade shocks.
Finally, the impact on communities.
Yeah, rural community impact. This goes beyond economics to the heart of rural life. Canada maintains an average of 96 cows per farm, indicative of family-scale operations, supporting a dispersed, vibrant rural population. Contrast that. U.S. average, 357 cows, clear consolidation pressure, larger industrial-scale farms absorbing smaller ones. The Bullvine article argues this difference in Canada represents thousands of additional family operations that support local communities, equipment dealers, veterinarians, feed suppliers, and rural infrastructure, like a diversified feed supply network versus relying on a few mega suppliers. Lose those family farms, you lose that economic ripple effect. Community decline, loss of services, the dairy desert seen in Australia with its 80% farm loss since 1980, New Zealand, faces intensification pressures, environmental and social strain as operations scale up, the human element, the health of rural communities, profoundly impacted by policy choices, a cost rarely factored into those free market efficiency equations.
Wow. When you lay it all out like that, side by side, the picture is, well, it's compelling. The Bullvine article calls this Canada's silent performance revolution, arguing the data should make agricultural economists rethink their textbooks, especially those clinging to old theories. It's bold, but the numbers seem to back it up. It stresses financial stability that actually works, citing those roughly 12,000 dairy farms under supply management, around 12% of all Canadian farms maintaining debt levels around 16% of assets year after year. It's systemic.
It proves stability and profitability can coexist for the majority.
Exactly. And contrasted sharply with the U.S., where those Chapter 12 bankruptcies jumped 55% in 2024. Yes, the U.S. dairy sector has impressive cash receipts, forecast $52.1 billion for 2025. Big number. But the Bullvine article says these figures mask the underlying volatility, destroying individual operations like a silage pile that looks good on the surface, but is rotting underneath.
That's a powerful analogy. Good silage management is key, right? Looks fine outside, but inside.
Right. The headline number might look healthy for the whole industry, but the reality for individual farmers can be devastating. That aggregate figure doesn't reflect the daily stress, the volatility many face, often forcing them out despite the overall market size.
Yeah, the average hides the extremes.
And it's not just financials. The article hits on a productivity paradox that destroys free market myths. Critics say supply management stifles innovation, productivity because it's rigid, protectionist. But Canada's 10,400 kilogram yield projections, they match Denmark's world-class output, a global leader in efficiency, directly defying claims that stability means stagnation.
So productivity is high and stable.
Right. While the U.S. projects slightly higher individual productivity, around 11,000 kilograms cow, with its 9.4 million head herd. The crucial distinction the Bullvine article makes is that this higher output comes only through a system requiring massive government subsidies.
Yeah.
So it's not pure market efficiency, it's subsidized output. It forces the question, what's the true economic and social cost of that productivity? Is it sustainable for the individual farmer without that constant external support?
Great questions. And that leads nicely into the next point, doesn't it? How stability impacts investment.
Exactly. Let's dig into that, because stability isn't just about avoiding bankruptcy, right? It actually opens doors for strategic growth. The Bullvine article dives into how this affects technology investment and uncovers some truly hidden costs in those other systems we rarely talk about.
Yeah, what's fascinating here is how that stability in Canada's system creates these unique opportunities for strategic technology investments. In volatile markets, farmers are often forced into reactive spending, putting out fires, replacing equipment in an emergency, making short-term calls just to survive.
Playing defense, not offense.
Precisely, but stable systems. They enable proactive planning. The article likens it to buying equipment during a planned upgrade cycle versus emergency replacement.
Yeah.
Imagine the difference in your stress, your ability to optimize for the long term, your ROI, when you can actually predict income streams years out.
It changes everything.
The article gives a really compelling ROI calculation example for robotic milking systems. Super relevant today. Cost, $200,000, $300,000 ballpark. Under stable pricing, payback is a predictable 7-10 years. Clear returns makes the investment sensible for future efficiency. But under volatile pricing, that payback could stretch to 15+ years, or maybe never happen. Just too much uncertainty.
The risk is too high.
Exactly. This Canadian advantage, the article notes, comes directly from predictable income streams, fundamentally de-risking those big long-term capital spends. And it's not just theory. It's proven by Canadian farms' strong adoption of capital-intensive tech, robotic milking systems, used for 17% of the nation's tested dairy cows. That's significant strategic investment.
They can actually plan for and afford the cutting edge.
Right. And McKinsey's 2025 dairy survey, mentioned in the article, notes 80% of global dairy leaders expect volume growth. 54% are already using AI in pricing and manufacturing. Canadian farmers, due to stability, are positioned to invest in these things strategically, not as a gamble, but as a calculated step towards future efficiency.
Which brings us to the hidden costs of free markets.
Yeah, the article argues the myth completely collapses like a poorly formulated TMR that looks cheap until you calculate the real cost per pound of milk produced.
Another great feed analogy. Cheap TMR upfront can cost you dearly later with health or production issues.
Exactly. And these free dairy markets, they come with massive, often unacknowledged costs borne by taxpayers and society. Let's talk the true subsidy math that changes everything. The article contrasts Canada's transparent, finite compensation, like for trade deal impacts, with the U.S. system's massive, often hidden, ongoing interventions. The DMC program, a permanent taxpayer-funded safety net, always there, always funded, plus emergency billions injected during crises, often reactively and inefficiently.
And do those subsidies even help the farmer directly?
Well, the article quotes Dr. Marin Bolzik, a University of Minnesota dairy economist. He states that direct payments to crop producers rarely translate to lower feed costs for livestock operations. Where does the money go? The subsidy gets capitalized into land values and farm equity rather than leading to lower commodity prices. For you, the dairy farmer, those grain subsidies, they don't necessarily lower your feed bill. They inflate land values, making entry harder for new farmers, boosting assets for landowners, but not necessarily helping the milk producer pay the bills.
It's a shell game, like the article said.
It can feel that way. Then there are the environmental externalities. Canadian dairy farmers, one of the world's lowest carbon footprints, 0.94 kilograms CO2 equivalent per liter of milk, and it decreased 9% between 2011 and 2021. Sustained improvement within a stable framework, enabling proactive environmental investment, like having a long-term nutrition plan versus constantly changing rations in panic mode.
Compared to
intensification pressures in export-focused systems. The relentless drive for scale often creates significant negative externalities, more greenhouse gases, water quality issues, land degradation. The article mentions research noting 1 billion hectares globally used to feed dairy animals. Often the drive for efficiency in deregulated markets pushes for larger operations that, while productive, can have a much larger, less sustainable environmental footprint, if not managed under a stable, regulated framework.
And finally, the social cost.
The social cost of market efficiency. Profound, often overlooked. Canada's system preserves around 12,000 dairy farms, average herd size 96 cows, a model supporting family-scale operations, multi-generational farming. Compare that to the U.S. average, 357 cows. Clear consolidation, rapid move to fewer, much larger industrial operations. The article argues that difference in Canada represents thousands of additional family operations that support local communities, equipment dealers, veterinarians, and rural infrastructure. These smaller farms anchor local economies,
Keeping rural communities alive.
Exactly. They support local businesses, schools, the social fabric. Lose those thousands of farms, like the 80% loss in Australia. You lose that ripple effect. Communities decline, services vanish, you get those dairy deserts. These are the true, often uncounted social costs of free markets, where chasing theoretical efficiency can decimate the human element of agriculture.
Okay, this is really where it gets interesting, isn't it? The fundamental irony the Bullvine article presents. That Canada's supposedly rigid supply management system actually delivers the very benefits free market theory promises, but rarely provides. Efficiency, innovation, consumer value, economic stability. It's a fascinating paradox.
It really is. And what's key here is how that stability fosters real innovation under stability. And it's not about just surviving, it's about thriving, looking forward confidently. This stable environment enables strategic tech adoption, not crisis-driven spending. The article mentions that industry analysis showing dairy leaders focusing on AI, 54% already using it for pricing, optimization, supply chains.
Because they can actually plan for it.
Exactly. Predictable income streams let them make these long-term investments confidently, knowing returns won't vanish overnight. And it allows for genetic strategy spanning generations. optimizing for balanced performance indices, building a herd for long-term profit, selecting traits carefully over years, not just chasing peak production numbers that might be unsustainable or need costly inputs. It shifts decisions from short-term survival to long-term strategic growth.
And it also helps balance power, right, between farmer and processor.
Huge point. Market power balance boardation. That prevents exploitation. The Bullvine article highlights Canada's system using provincially regulated produce marketing boards. This structure gives farmers legal mechanisms for countervailing power against processors, what that means for your operation.
Yeah.
You're not negotiating alone against giant corporations who can dictate terms.
You have a collective voice.
A negotiating bloc, preventing the kind of exploitation seen elsewhere. You have a seat at the table. The article uses that powerful, chilling example from Western Australia. Just 3 processors control the entire market. In that concentrated market, they have suppressed farm gate prices by a shocking 30% below national averages. The article asks you directly, what would happen to your operation if your processor suddenly cut payments by 30% while your costs stayed the same? That's not hypothetical for free market farmers. It's a harsh reality when processors wield monopoly power, leaving farmers with no recourse, forcing them into distress or out of business. Canada's system, by design, avoids this dramatic power imbalance, ensuring fairer value distribution, protecting producer livelihoods, making sure the farmer, bearing the risk and effort, isn't at the mercy of few powerful buyers.
Okay, so bringing this all together for strategic planning on your farm, the Bullvine article offers this stability assessment checklist. It's a really actionable way to evaluate your long-term viability under different policies.
It's a great framework.
First, income predictability. Can you forecast cash flow 12+ months ahead? For many, that's a pipe dream, constant anxiety. Doing it changes everything financially. Second, investment confidence. Can you justify those long-term facility upgrades, robotic milkers, barns, making those huge commitments without losing sleep, knowing the market won't pull the rug out? Third, genetic strategy. Can you plan breeding across generations for long-term improvement, setting your farm up for future success, not just reacting? Fourth, market relationship. Do you have real negotiating power with processors, or are you just a price taker? Crucial for fair prices, preventing exploitation. And finally, crisis resilience. Can you weather downturns without needing emergency government bailouts? Because the system itself provides a buffer. It's about the fundamental health of the system you're in.
And the contrast is stark.
Extremely. The Bullvine article says Canadian farmers check all those boxes. A resounding yes to each consistently. Free market operations. They consistently struggle, often checking no or maybe with luck. This gives you a clear framework to assess your own situation. Understand the policies that support or hinder your success. It shows it's not just about how hard you work, it's profoundly about the system you work within.
Absolutely critical distinction.
Okay, let's wrap up by unpacking the 2025 stress test results from the Bullvine article. These past few years, 2025 especially, with all the global chaos, they've provided clear, undeniable lessons for dairy policymakers everywhere. The core takeaway: stability isn't the enemy of efficiency, it's efficiency's most critical component. That flips conventional wisdom right on its head. A predictable environment is what truly allows optimal performance, innovation, long-term resilience.
And the real-world test was crisis response, wasn't it? The article points right at COVID-19's impact. U.S. farmers faced massive disruptions. Supply chains broke down, demand shifted, leading to widespread milk dumping. Heartbreaking, economically damaging, pouring product down the drain because the market system couldn't cope.
A direct result of volatility and lack of coordination.
Exactly. Contrast that. Canada's centrally coordinated quota system provided tools to rebalance supply with demand almost immediately. The article's analogy: comparing 2 feeding programs during a feed shortage. One system panics, massive waste and loss. The other systematically adjusts production, optimizes inputs, avoids catastrophe by matching supply to demand. A fundamental difference in resilience during crisis.
Technology adoption, too.
Technology adoption under different systems. McKinsey survey showed global leaders planning more innovation investment, AI rising in priority. The Bullvine article states Canada's stability enables consistent tech investment. Farmers can budget for and implement advanced solutions. Robots, software, AI, knowing income streams are predictable, investments will yield returns. Unlike the feast or famine cycles in volatile markets. Have a good year, want to invest, boom, downturn hits, plans shelved or abandoned. Undermining long-term competitiveness, preventing full use of crucial modern tech.
And the food security angle.
Crucial point. Food security as a strategic asset. By design, Canada's supply management ensures domestic self-sufficiency in dairy, producing enough milk for its own needs, reducing reliance on unpredictable global markets for a basic food. That's a huge strategic asset in today's world. Geopolitics, trade wars, pandemics, fragile supply chains. Domestic food supply is national security.
Unlike export-heavy systems.
Right. Contrast with export-dependent systems like New Zealand exporting 95% of its dairy. Profitable in boom time, sure, but incredibly vulnerable to global trade disruptions, shifting demand far away, currency swings. Their food security is at the mercy of international events. In a crisis, relying heavily on others for basic food is precarious.
Okay, so let's bring it home. What does this mean for your operation? Actionable steps, takeaways. The Bullvine article gives us a clear framework, like a diagnostic tool for your farm.
Yeah, it encourages some immediate assessment steps.
First, calculate your volatility cost. How much do you really spend managing risk? Hedging, futures, or just the hidden cost of not planning ahead, delayed decisions, missed opportunities. Compare that to stable system farmers where it's often near zero. Second, evaluate investment delays. List those upgrades, facilities, equipment, tech postponed only due to price uncertainty. What's the true opportunity cost? Third, assess processor relationships. Do you have meaningful negotiating power or are you just a price taker? Fundamental for fair pricing. Fourth, analyze crisis vulnerability. How dependent are you on government programs for survival? How resilient are you if that net isn't there or shrinks? And fifth, compare technology adoption. Benchmark your innovation investment. Are you consistently investing in the future or always playing catch-up due to instability?
Really forces you to look inward.
And beyond that, the article poses these powerful strategic questions for operation evaluation. Really make you think about the ideal state. How much would guaranteed pricing 12 months ahead change your investment decisions, your hiring, your whole outlook? What specific tech upgrades would you pursue with predictable cash flow, knowing the ROI is clear? How would stable neighbor relationships, collaborative, not cutthroat, change your planning, your community involvement, and maybe the biggest one, what would eliminating systemic bankruptcy risk mean for your family's future, your peace of mind, your multi-generational legacy? These aren't just questions. They're an invitation to critically examine the foundations of your business and the policy environment around it.
Yeah, this deep dive into the Bullvine article, it really hammers home the idea that the evidence from 2020-25 demolishes the free market orthodoxy. It's not just academic theory anymore. The real-world performance data, too compelling to ignore, reveals the huge gap between theory and reality. When you truly calculate the total costs, economic, social, environmental, including hidden subsidies, social disruption, environmental externalities, Canada's supply management system emerges with demonstrably superior outcomes across every meaningful metric: financial health, price stability, environment, rural communities, total economic efficiency.
So the article's conclusion is a challenge.
A clear challenge to industry leaders, policymakers. Demand honest accounting of total dairy system costs. Question the assumptions underlying your industry's policy positions. And ask that fundamental question. If your current system requires constant government bailouts to prevent widespread failure, is it really a free market at all? It's a powerful call for reevaluation based on evidence, comprehensive cost-benefit, not just ideology.
So, final thoughts for you listening. As you plan your future, consider your farm's viability. The Bullvine article suggests the Canadian model, or at least its core principles of managed supply and stability, offers a clear roadmap, a path for sustainable dairy policy in this increasingly volatile world. The data, as we've unpacked, is pretty clear. The comparisons are stark. They demand attention. The choice, ultimately, is yours. But remember that provocative closing line from the Bullvine article. Every day you delay addressing systemic instability is another day your operation remains vulnerable to forces that Canadian farmers learned to manage decades ago.
Food for thought.
Definitely. It's like choosing proven genetics, right? Tested, refined across multiple lactations, diverse environments, delivering consistent, predictable performance. Choosing that over those flashy new bloodlines.
The ones that look great on paper.
Yes, exactly. Sky-high numbers promised, but untested in the real world. Long haul, under varied conditions. It's about building a robust, resilient herd. And a resilient business. Something to chew on as you consider your next move, right? We definitely encourage you to revisit this Bullvine article. Think about how these insights apply to your farm, your future. Until next time, keep digging for those deep insights.
That's a wrap on today's episode of the Bullvine podcast. And if you're not questioning everything you thought you knew about dairy markets right now, you weren't paying attention. Here's your bottom line. When total economic, social, and environmental costs are honestly calculated, Canada's supply management system demonstrates superior outcomes across every meaningful metric: farm financial health, price stability, environmental performance, and total economic efficiency. While free market systems require tens of billions in taxpayer bailouts and create environmental disasters, Canada's managed system provides stable incomes and world-leading environmental performance. The question isn't whether supply management works. The data proves it works better than any alternative. The question is whether you'll have the courage to challenge your own assumptions about what makes a dairy system truly efficient. Here's your homework. Go to thebullvine.com and read the full analysis. Calculate your operation's exposure to price volatility. Ask yourself how much guaranteed pricing 12 months ahead would change your investment decisions. And then ask your fellow farmers, your industry leaders, and your politicians this fundamental question. If your current system requires constant government bailouts to prevent widespread failure, is it really a free market at all? This is the Bullvine Podcast, where we believe the most radical thing you can do in a chaotic world is choose stability. Just like choosing proven genetics over flashy new bloodlines that haven't been tested across multiple lactations. Until next time, keep challenging the conventional wisdom, keep demanding honest answers, and remember, every day you delay addressing systemic instability is another day your operation remains vulnerable to forces that Canadian farmers learned to manage decades ago. Thanks for listening, and we'll see you next time on the Bullvine Podcast.